it's related to the term loans. So actually, there are two types of the components which can be sanctioned. One, it is in the case of the working capital limit, that is a CC limit which can be sanctioned, and further it is a term loan which can be sanctioned. So in particular video, we'll be covering the term loans over there. So banks provide the term loans normally for acquiring the assets. Whensoever the fixed assets are to be acquired, the term loans are sanctioned. But exceptionally, in the case of working capital, the term loans are also sanctioned. Those are said to be what? Those are said to be the working capital term loans. Those are said to be WCTL, that is a working capital term loans, in which the term loans are sanctioned in the form of the working capital over there, and there is a fixed repayment schedule over which the EMIs or the repayments are to be made. And further, the examples related to the term loans are, like we can say, personal loans, consumption loans, education loan, housing loan. All those are sanctioned in the form of term loans over there. Okay. And particularly related to third point, it says working capital loans are normally sanctioned for 1 year. In case if we do consider from the previous chapter itself, that is from the analysis of the financial statement, I just told you that net working capital is equal to what? It is basically equal to current assets minus the current liabilities. And what was working capital gap? The working capital gap was equal to current assets minus the current liabilities other than bank borrowings. Okay, so that was working capital gap. Now, part of the working capital gap is to be financed from the promoter itself by way of contribution. It can be, their margin is to be contributed either from the promoter itself, or it can be contributed from the surplus long-term assets, from the surplus long-term sources, not assets, from surplus long-term sources. Okay. So in case of working capital finance, whensoever the working capital finance is to be done, let us say the CC limit of 500 crore is to be sanctioned. A CC limit of 500 crore is to be sanctioned. Now, a margin is to be basically contributed by the borrower himself or herself. Okay. So in that particular case, if we say the margin is 100 crores, that will be contributed either by contribution of the newer capital, or it will be the case that the 100 crores will be contributed from the long-term funds or long-term sources so available. Okay, so working capital is basically sanctioned for 1 year period because it basically take into account the working capital needs of the firm. That is basically around the working capital cycle over there. But in the case of the term loans, these are payable as per the repayment schedule. It can be a mid-term loan, it can be a long-term loan, it can be a short-term loan. Okay, so for which the loans are to be repaid over the different tenures. So there is no fixed, or we can say there is no uniform repayment schedule for all the term loans. So it may be the case that the one term loan can be having a repayment schedule of one year, and the other can be having the repayment schedule of 3 years or 5 years or even more. Okay, so term loan is to be repaid out of the future cash flows of the borrower. That is, a debt service coverage ratio is having a great importance while considering the term loans over there. So whensoever the term loan is to be sanctioned, it is not basically related to that what inflows we are having right now and how we will be paying the repayments. It is basically related to whatsoever the future cash flows we will be having. Based upon that, and from those future cash flows only, the repayments are to be made. Okay. And further, it is related to, I already told you that there is no uniform repayment schedule for all the term loans. Then it is related to the DPG, that is a deferred payment guarantee. Now, what is the guarantee? What is bank guarantee, or simply what is guarantee? So let us take the case that A has purchased the goods from B. But B is not sure about that he will be getting the payment. So he asks the B so as to get him some guarantee from the bank itself. So A visited the bank XYZ, and further analyzing, after appraising the borrower itself, XYZ extended guarantee in the name in favoring person B over here. Now, in case there is default on repayment, in case there is a default of a repayment by person A to person B, in that case XYZ bank will be having the obligation so as to pay the amount. Same is the case with the DPG. But why it is different? Because in case of the capital goods, when the importer or the creditor, or the debtor, not the creditor, when the importer or debtor, let us take the case that person A is importer over here, who has imported a machinery from B over here, which is a capital good. So it basically covers a big amount. Okay, so let us take the case the import was amounting rupees 10 crore. It was amounting rupees 10 crore. Now A is not in the position so as to pay rupees 10 crore at an instance, and further a guarantee was extended by XYZ bank to B over here. So token amount was paid by person A to person B. Let us take the case that 2 crore rupees were paid, and further the rest of the amount will be paid by the importer in the installments over there. So that is basically related to what? That is related to the deferred payment. That is related to deferred payment, that the amount will not be paid in one hit and will be paid in different repayment schedules and different installments over there. And over there, in this case particularly, the amount will be paid by the importer, but if there is default, the amount will be repaid by the bank itself. So when a purchaser of a fixed assets does not pay the supplier immediately, but pays according to an agreed repayment schedule. So there will be an agreed repayment schedule in between A and B, and as per that A is to make the payment, and further if there is default on the part of the importer, on the part of the debtor, in that case the bank will be having the obligation so as to pay the amount. That is called the DPG. So it is basically non-fund based method. So it is basically non-fund based method. The appraisal of DPG is similar to that of the term loan. Okay, so the appraisal of the DPG is similar to that of the term loan, but in case of DPG, it is a non-fund based method. It is a non-fund based method because the bank is having the obligation so as to pay the amount only and only if there is an event related, there is default by the importer. There is default by the importer. Otherwise, the bank will not be paying the amount. Okay. So, however, if purchaser defaults in payment of any amount, the bank has to pay the same to the supplier, and the exposure becomes fund based. Only on crystallization, the exposure will become fund based. Otherwise, it is a non-fund based method. Okay. So the risk involved in case of DPG, because I told you that the appraisal is same as that of the term loan. So the risk involved in the case of the DPG is as the same quantum as that of the term loan over there, and therefore the appraisal is also same. And therefore only the appraisal is also same. Next, it is related to the differences between the term loan appraisal and the project appraisal. Differences between the term loan appraisal and the project appraisal. Now, what is actually the project appraisal? Project appraisal is basically related to that we need to look into that each and every detail of the firm itself related to some particular project. Let us take the case that this particular project is to be financed. In that particular case, it may be the case that the firm required term loan, the firm required CC limit. Now, in that case, CC limit, term loan, both will be sanctioned, and moreover, the margin contribution. I already just told you that whensoever a CC limit is sanctioned, a margin is also to be contributed. So some of the part of the CC working capital will be sanctioned by the bank itself, and some of the part will be contributed by the firm itself. That is said to be margin. Now margin is contributed either by way of new capital, either by way of contribution of the new capital from the investor, from the promoters itself, or it may be the case that the margin will come from the long-term sources. Now, if the margin will come from the long-term sources, in that case, the term loan will be having a additional point to look into. So as to that particular point is also considered in case of project finances, but not in the case of the term loan appraisal. Is that clear? So in project appraisal or in project finance, all financial needs of the enterprise, including the working capital requirement, are appraised. So each and everything will be looked into. Okay, because total requirement of the long-term funds includes a margin requirement too. So as for the long-term funds, we also do require the margin requirement for the CC limit itself. Okay, whereas in the case of the term loan appraisal, that particular aspect is not looked into. So if an existing enterprise want to purchase new machinery, a few new machinery over there, which are not going to have a major impact on the volume composition of the business, it will serve little purpose to have a detailed examination of the techno-economical feasibility, managerial competence, IRR, etc. What does it indicate? That if we are going to start a new business, definitely we need to look into each and every aspect of the company, each and every aspect of the project itself, that whether the project is viable, whether it is having the feasibility, whether the management is competent enough, and all the aspects must be looked into while sanctioning the loan. But when we are basically, let us take the case where there is a existing firm, who is already working in the field, and that is already viable and already generating the profits, and they want to buy new machinery, in that case it does not require that much detailed examination. Okay, so in that case term loan appraisal will be done. But where full examination is to be done in that case, that is related to the project appraisal. Is that clear? Okay.